Boom. We are alive, ladies and gentlemen. Thank you for joining us today. Happy New Year, or Gung Hei Fat Choi, which I recently found out means I hope you get rich. I hope all of you watching this stream out there get rich. And with Bitcoin on its recent move upwards, I'm sure that's a little bit easier, which is what we're going to take a look at right now. We're going to dive in and take a look at Bitcoin. We've been following this really long chart for quite some time, studying the Wyckoff theory. And it's been productive for us. Now, one of the things that's important to remember, and we'll start from here, is that we are in a bullish trend. So usually, once we're in a bullish trend, it's somewhat easy to follow because it doesn't require us to do a whole lot more other than continue to follow the trend. Now, I would like for you in the chat at this moment, if everything's working okay, let me know. The internet here in Mexico is not great. So please let me know if everything's going smoothly in the chat. But as we zoom into Bitcoin, this is what we've been following. Now, I put out an update right before the family vacation started. I actually thought this was distribution because of this upthrust here. But as soon as we moved back into the box, we repositioned ourselves and said, okay, well, it's clear that we're going to get a bullish movement because of this reaccumulation channel within inside the box. And we've actually seen these before where we have a horizontal reaccumulation within inside the trading range, within a larger trading range. And this is something we've gone over time and time again. This is called, there's a few ways to look at this, but scale invariance is the most predominant one. We've talked about it many, many times. So it means that if you're following a trading range, you will find smaller trading ranges within the sentiment. So I'm actually going to go back out to the larger version of this, and we'll look at the previous 2019 to 2020 accumulation, larger accumulation range, this one that I'm drawing out now, and then the two accumulation ranges within inside the box that ended up being the start of the bull market. And this is what I think we're witnessing now. I think now what we're witnessing is that there is a much larger reaccumulation pattern that has been taking place effectively from the bottom of the box at around 17,000 and to the top of the box here at around 61,000. So we had our first reaccumulation range here, our second here, and I believe we're in the third now. Now, I originally thought, and the reason why I made statements in the private group that I thought we were going to go a little bit lower between 36,000 is I thought we would see a bigger trading range form here. We still might. I'm not entirely convinced that we don't come back down to 30,000 and create this larger trading range. I don't know why I feel that way. I was wrong about it already because I thought we would go down to $36,000 from here and then create that new range. But this was an early on sentiment of mine. In fact, if you go back and look at the videos when we were back at $25,000, I said, hey, we're going to rip up to 50,000 and then create that $36,000 movement. So I might just have a biased sentiment based off the fact that that's what I thought was going to happen since all the way back here. But currently that's been invalidated by the fact that we have moved outside of this trading range. So again, trading range here on the 4-hour, middle of the box, reaccumulation range, which is actually the test. Now our first SOS, and now what we'll likely see is a backup phase. Now there is, again, reason to believe that this could come all the way back down to 36,000 but we want to make sure that we test the top of this box. As we saw with Avalanche, if we come back and fall through the middle of the box and can't close back above the trading range, then I think we're going to see that larger $36,000 movement. But for now, everything says bullish. So ultimately, I'm not going to change my sentiment here unless we see something different come and take shape here. The reason being, again, is I think I might have had an early bias to that $36,000 downside because I've held it since we were at 25 to 27,000. So it could simply be my own biasness, or whatever you want to call it. Anyways, point being, for now, as we had pointed out the other day on our previous video, this looked very bullish. It looked like a middle of the box reaccumulation, and we're seeing this across the board. So I'm going to actually take a look at Solana first here as well. This was another great example. Just for fun, let's go back as we have this one previously drawn up. This is what an accumulation range looks like. This one's nicely charted out for you. This is what we are sharing in the private group. We had our first buying climax. our buying climax, our shakeout, our up thrust, our secondary test, spring test, the jump across the creek, and again, a middle of the box reaccumulation range here as well. And again, the reason why I keep kind of going over this stuff is because I've gotten much better at this, but I still make small mistakes. I get pushed out of trades because I'm like, oh, maybe I was wrong or this or that. It's actually quite difficult to build a position in the correct spot while you know there's bullishness and the behavior that you're looking for within the markets. It takes a lot of effort and practice. It's one of the reasons why most of the time the best thing to do is just keep investing consistently. But from a trading perspective, knowing how to use these ranges makes a huge difference in your profitability, not only in investing, but in trading as well. So it's really important to recognize that. I think it makes a big difference for all of your positioning. So here, again, once we had the jump across the creek, we went into our SOS backup phases and LPS and then started a big movement up for Solana. And this is what I think we're seeing now. I think we are pretty much in an identical scale invariant phase for Solana and for Avalanche as well. I think we had our buying climax, our shakeout, our secondary tests, our spring, our test. And we are now jumping across. We just basically jumped across the creek, back tested the creek, which is usually highlighted by the point of control or this red line here on my VPVR. So what does that mean? It's highly likely because of all of these setups that the bullishness is going to continue. When you have so much data leading in one direction, it's usually best just to trust that data instead. Instead of one position in one play, look for what all of them are saying, and we see that across the board. So right now, what I suspect is happening is that this was the reaccumulation range within the box. That this movement here was actually the smaller scale invariant reaccumulation channel within inside the trading range. And I suspect that that's what we're going to continue to see. So let's take a look at Avalanche. Avalanche, again, I was incorrect about this one. My bullish bias to the upside, I think, was probably a little overdue, mostly because we had the bottom of this trade marked out so perfectly. Again, if you go back and watch the videos, or if you were in the private group, we went through kind of a step-by-step basis where when this moment happened, we sent an email about the shakeout. When this moment happened, we sent an email about the spring, the test, the jump across the creek, which took place right here, the middle of the box reaccumulation range, the first SOS backup phase, and the explosion into 100% gains in Avalanche in a very short period of time. So when you do it right, it can be extraordinarily profitable, and it can lead to a lot of confidence. You know, there's a lot of YouTubers like, oh, Bitcoin's going up, Bitcoin's going down. I did make a mistake in the previous one because, like I said, I thought Bitcoin was going to break down here, but I think that may have just been my bearish bias from the $27,000 mark that I had. And that's been invalidated in the private group. We quickly updated that and said, oh, you know, this looks like the test instead. So we can't get everything right, but as long as you're changing your opinion as new data comes to light, you're not really wrong, you're just learning. And that's important. That's one of the reasons why we reiterate, hey, look, this is where we made a mistake. This is why I think that mistake was made. Whereas most everyone just doesn't reiterate the fact that they made mistakes at all. I think it's important to go and find where we made the mistakes and then utilize that information and data as a positive learning experience. So ultimately, very bullish for both Solana and Link here. For Solana and Avalanche, it looks like we had our shakeouts, our test, our shakeouts, our spring, and our test. You can also see how this looks like an inverse head and shoulders too, which is predominant in the reaccumulation patterns. We've gone over this before, but just for fun, I'm going to take you there now. If you go to arcanebear.com and you want to sign up, remember there is basically no risk for you. We've got a money back guarantee for the first month that you sign up. So if for some reason you are not happy about the product or the data or whatever it is, we just give you a refund with no questions asked. So you basically get a free trial. If you're interested in signing up, you just go to arcanebear.com. But some of the data there I'm going to share here in just 1 second. I didn't realize I had not logged in to my own account to show that. 1 sec here, ladies and gentlemen. Sorry, took me a second longer. Okay. That should be, oh, actually, you know what I can do? I already have them here in our educational section of our private Discord channel. So I'm just going to use that instead, much faster. There we go. Data's already uploaded. So here we're going to look at the inverse head and shoulders as an accumulation pattern. Again, I think this is what we're seeing here with Solana. Notice the kind of phase A and C retests here. So I think that this was basically your inverse head and shoulders. I think we're seeing the same thing with Avalanche as well. This effectively looks like that inverse head and shoulders to me. And then the breakout of the neckline is effectively right where we are now. We're just starting to see that neckline breakout. If we zoom in a little bit closer, we can see that there is some bearish divergence on the 15-minute, but it's likely that because we are in the SOS and backup phase that we won't get a huge retest here for Avalanche or Solana, for Avalanche or Solana, maybe come back down to 36. But I suspect we're going to get a little backup range like this before continuing upwards of $55 for Avalanche and at least to the top of the box. So just for fun here, let's look at this from the top of the range here. I think what we are doing now is completing with confidence the idea that we're going to remove to the top of the box. Whether it's a continuation of a bullish move or it becomes bearish has yet to be seen. Again, there is reason to believe that we see a larger reaccumulation channel take place effectively for Bitcoin and for these other assets. So until we get to the top of the range, it's better to just wait effectively. But here, between where we are now and the top of the box is around 35% for Avalanche. So it's a big move. And with all of the bullishness in the ecosystem right now, I suspect that that's what we'll get. This is going to turn into the inverse head and shoulders. We're going to break the neckline here. We're going to shoot up to around $55. We'll probably see another middle of the box reaccumulation range here before moving up to around 50 to 55. At that point, we'll need to readjust because it could be that this is distribution and then we come back down. It's hard to say at this moment because of where Bitcoin is. And this might just be that initial bias that I had, assuming that we would get a larger middle of the box reaccumulation that looks something like this for Bitcoin, moving into the halving before seeing new all-time highs somewhere around mid to beginning of 2024. So there is still reason to be somewhat cautious for trades you're making, but in terms of investing, again, you can just invest consistently. You should be trading your dollars for Bitcoin. Don't throw your money into shitcoins unless you know exactly what you're doing and you've measured the risk. There's lots of room for upside in these, but there's also room for downside. And over the years, in all of our newsletters, Bitcoin has remained the dominant guiding light. And there's a reason for that. I think it'll be the money in this ecosystem for many years to come. And although there's new technology like Avalanche that we like and we think has a validity for areas in the market like gaming or social, Bitcoin will be the money, and having a money as your center point is probably the most important, because if you were to invest in one thing, Bitcoin would be the one I would want that has the least risk in it at the moment, but also probably the least amount of room for upside in comparison. So it's always a risk to reward relationship of how much could I make, and then also how much could I lose. And this is really important to understand. Most people only focus on how much could I make, and they're not protective of their capital to the downside. So those are the last thing I wanted to go over today was the fucking S&P 500 is at new all-time highs again. It's just day after day after day, new all-time highs. We're almost at 500 points on the ETF trust for the S&P 500, which I believe is 5,000 just on the regular S&P. So this is another beautiful kind of lesson of shakeout, spring, test, final test, reaccumulation, middle of the box. Again, here, look at how beautiful this reaccumulation was right at the middle of the box. Bang, bang. Boom, big SOS, backup phase right back down to the top of the box. And whew, this is the other reason why I still feel like there's room for downside in a larger trading range within Bitcoin here, is because we have not seen any downside in the S&P 500 at all. I do suspect that at one point we're going to at least retest the top of the box here for the breakout of this range, which is around 472. So I suspect that we see something like this, and they'll probably coincide with one another. But at this moment, it looks like they're just going to keep printing. The interest rates will get dropped in the future. So even though there is room for some downside, the bullish trend is bullish and for probably a few more months at the very least. So be patient in that understanding. When we're following trends like this and we see the potential for the upside of $55 for Avalanche, you have to remember it's because of this larger time frame sequence we've been following here. So just to reiterate, we go back over, we take a look at some more of our educational materials. Most of the time, the falling wedge that you're interested in is only on a few hundred days. Anyone who shows you a video or a screen capture of a falling wedge on the 15-minute or the 1-hour chart doesn't totally know what they're talking about, or at least is not letting you know how unreliable that form of charting is. It's more like chartism. It's more like a religion with the lack of understanding and a blind faith in a shape instead of true understanding and wisdom within charting. So chartism, the blind faith religion of, oh, it's a falling wedge, and then charting and technical analysis, people that actually know what they're doing and understand that if you have, as Avalanche is sitting here, let's see, how many days into the falling wedge? 537 days into the falling wedge. The primary breakout sequence, oh, sorry, here we go. Here's a beautiful reaccumulation schematic. Falling wedge, phase in spring C, or spring in phase C. Boom, phase C, spring, break out of the box, test at the top of the box, and then breakout here. So test at the top of the box, SOS, backup phase, and then a likely continuation up probably upwards of $60 to $100 in Avalanche. Now again, this could turn bearish, but ultimately the thing that leads me to believe it's going to be bullish is that when you have 500 and something days into an accumulation channel, the market operators are not going to simply run it up to crash it down in a very short period of time. The bull market is usually at least half of the accumulation time, and we're only 123 days into this. So I suspect very likely that there's at least another 123 days of this bull market to go, if not more. So remember, falling wedge here in a schematic 4 is very valuable, but only if you have a few hundred days into the accumulation cycle. If someone's down in the 1 hour and they're showing you a falling wedge, it's likely that they're going to be invalidated and wrong. And this is often why people don't think that technical analysis works, is because they just don't see anyone use it properly. But when you have this large data set, it's significantly more reliable, and you get much more profitable results, and the confidence level of the positions that you're taking can be way, way higher as well. So I'm going to leave the last little bit here up for a few questions. Maybe we'll look at a few charts that you guys want. Awesome. Good morning. Everyone's enjoying it. Is the stream working? Yes, everything seems to be working. Beautiful. I guess we're set up here for one more day, so I'll do another live stream again tomorrow too, just because everything's already set up. Can you take a look at Zcash? Sure, I will take a look at Zcash here. Obviously, you're just going to get a very quick breakdown of what I think, but we'll do like a moment where we do a audience participation moment and see what you guys want to look at. So we'll take a look at Zcash. Okay, so right out the gate here, it doesn't look good. You know, I know some of you guys are stoked. You're probably in positions. You might see a breakout here, but one of the things that's important to remember is that if we haven't seen a breakout in the market yet, especially for some of these assets, you don't want to be in them. Like for instance, Zcash here, it looks like it's had some up cycle in the last year. It was up 45%, then it's down 45%, but it hasn't moved yet. And that's a big indication that the market doesn't like it anymore. So even though it might break out, it hasn't broken out yet. It's better to follow a trend leader. Again, even though Solana is up significantly, it's now performing a beautiful backup phase. Why would you want to sit in an asset that's not performing right now? Any asset that hasn't gone up 15% in the last week or two is probably an asset you don't want to be in, because there's a better choice already. If it's not keeping up with Bitcoin, at least somewhat, get the fuck out. It's not worth. You don't think, oh, it's a privacy coin I want to be in. Oh, there's a future benefit for it. If it hasn't started to produce that particular accumulation or reaccumulation range yet, likelihood it's because the market doesn't like it. You should take that as an indication, and you should use your intuition to say, oh, it's not just that there's less risk here because it's lower. Solana's higher, there's more risk in Solana because it's up more. You should think the market doesn't give a fuck about whatever this is. Now, the market can be wrong. There are times where the market might not know, and you know better, but generally it's better to follow the market. Consensus is not always right. Lots of time consensus is wrong. But when you're in the job or business of making money, it's better to follow the pack leaders than it is to stick behind with those who are not. So that's my thoughts on Zcash. Again, it doesn't have the momentum already, it hasn't moved already. And although it looks like it could be in some type of reaccumulation cycle, the fact that it hasn't moved up and started that breakout cycle yet is a really bad indicator, and you're better off in another asset. So I see one of you guys has asked about ETC. So ETC, which is, we'll have to do in crypto only, Ethereum Classic. So let's see where Ethereum Classic is. Okay, so it at the very least has moved outside of the range. So this is this is kind of how I would see it. I would see this is the top of the range. This is the bottom of the range. It looks like it's completed its kind of SOS and backup phase. You could see some market movement cycle up, but let's just for fun measure the percentage it's moved so far. It's only moved 67% to the top of the box. Whereas again, if we compare with Solana from the bottom of the box to where we are today, we're up 400%, with Link from the daily, even just from the middle of the box, we're up 180%. So again, this is the kind of general comparison I like to do. If your asset has not kept up with these that are already moving, chances are it's not going to keep up with it in the rest of the cycle. Now, this is not a be-all, end-all of the answer. And generally, I don't follow consensus. I'm usually one of the only people that's not consensus-based. But in the market is right and you are wrong no matter what. Because if it goes up, it doesn't matter if you think you're right. If your assets prices are not going up, you're wrong. So I try to keep it at there. So same thing with ETC here. Although I do see a reaccumulation channel and I see a SOS and backup phase, it's still lagging in the market. There is room for upside. And actually, I do suspect that what you're witnessing here is a pretty classic cup and handle indicator. Now, most people don't, I think most people get this stuff wrong, but this is where the cup is, and that's your handle. So it doesn't just that it goes down all the way, it's that it makes this kind of nice multiple test of the bottom, boom, 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 and then comes up and has this nice side piece. So it looks like to be a formation of a cup and handle, but again, because it's lagging in percentage growth, I wouldn't want to lead there. Thoughts on DOT and Matic. Okay, I think we have Matic already open because it is one of our more interesting coins. I think the layer 2 sentiment here is pretty much dead. It doesn't look good for layer 2s at this moment. Again, even for Ethereum, I think that we're going to see Solana and Avalanche take a lot of the thunder away from Ethereum over the next few years, especially in the video game sector, which is largely where we think the majority of mass adoption is going to come from. Not everybody can buy Bitcoin, but if they can play a video game to earn a skin, to sell that skin for some Bitcoin, that's fucking genius. I still think people have underestimated the video game sector. I think it's where the majority of the 100 or 1000x gains are going to come from. And currently, even though I think the layer 2 segment had a great run in 2021, it doesn't answer a lot of the problems that we're having today for video games for many reasons. And I think Avalanche is well primed for that. It's one of the reasons why we've been so vocally bullish about Avalanche over the last few years. But just to get a better look at where we are with Matic here, there is still room to the upside, but it hasn't left the trading range yet. Again, Solana is well outside of the trading range. So is Avalanche and so is Link. It's better to be in those positions, even though they're up higher. They're showing very strong, very stable reaccumulation ranges that are going to produce results today. Whereas even though, again, I suspect that Matic is going to go to the top of the box, that's only a 50% gain. Link and Solana and Avalanche are already primed to do exactly that, and I feel much more confident in an asset that's already moved. I do remember some good ideas about DOT because it is not a layer 2. So we'll take a look at DOT here. Do I have DOT open already? No, it doesn't look like it. DOT. So add it to the bottom here. We'll take a look at DOT. And again, well, back, look, you see, look, here we go. You can see one of my my initial cup. This is a beautiful cup and handle for DOT back in September of 2021. And the explosion here was beautiful. This was a sexy reaccumulation range. And this is what a really, really well-formed cup and handle position looked like. As you can see in the middle of the range, you had this beautiful, perfect reaccumulation range before massive breakup. Let's go back out to the daily though, to give us a bit more data on where we are now. Okay, so we're basically right at the top of the box here. I would make it, see, and the other thing too is if the trading range isn't very clear or very well defined, it means that the asset is not in strong players' hands. It means that it's in random people's hands or in people that are not looking to accumulate it. Now I can go over a few of these where it just doesn't look clean. Solana and Link, like look how, okay, just for comparison, look how perfect Link's reaccumulation trading range accumulation box was. It was fucking flawless from top to bottom, just sexy, perfect within the range. But then take a look at DOT. DOT here, it just doesn't have the it's just not as clear. You're like, where's the top of the box? Are we in the SOS phase now? Is this the top of the box? Now I'll go over a few quick things here as an educational lesson to show you where I think we are. Predominantly speaking, generally your primary support is right here. It's where you have your first large significant volume phase. I'm gonna have to move it over here. Notice this volume that I'm circling down here. This mass or supply, I guess it's better to call it supply. This massive amount of supply at the bottom of the screen here, that's usually your primary support, followed by your shakeout here. You see your secondary tests, again, focused on the volume and supply signature. Secondary test, your up thrust, or automatic rally, boom, boom. And then your shakeout, again, secondary test, but your secondary test is so much lower than your primary support. It just is not in strong hands. And when you have this type of trading range where it's not clear, like again, especially because you have your secondary test way below here, boom, way below the box, I just wouldn't be confident about it. It means that even though it might be the fucking next best thing since pancakes and nobody knows it yet, currently the market doesn't think that. And this is how I feel is important to look at the market, is to go, is the trading range really well defined? If it's well defined, how tight is the box? Is it being bought up within that perfectly horizontal trading range based off the supply signatures that we go over very, very frequently in our private group? Actually, I wonder if I should do this. You know what? It's not the 10th today, but I'll do it for tomorrow because it'll be a little bit easier for me to get everything lined up. But tomorrow we're going to have a discount for 10 of you to sign up for the private group as well. We'll give you a 10% discount for the Chinese New Year. But I'll have to do that tomorrow because I won't have time to do it today. Okay. So back to my thought here. If your accumulation trading range is, let's say, dirty like this, I would leave it and I would look for something stronger. The market is smarter than you are. And even though you might be right, DOT is the next best thing since pancakes, it's not showing that data now. And if it's not showing it now, it's probably too late. It's better to follow the pack leaders. Okay, some of your guys' thoughts here. Do you look at ETFs too? Generally, I only look at ETFs as for the S&P 500 to be a lead indicator for where the market is going, we constantly look at the S&P 500 as, hey, we're bullish. This is why we're bullish. All of these larger assets are moving up. We suspect that they're going to move up as well. James Town says, I don't think I've heard your take on ordinals and BRC20 tokens, how much you've been keeping up with them. I think any collector's items will do well, but I think they'll do the best in video games. I haven't seen the application of ordinals in video games yet. If they start to produce that stuff, I think it's really high. For now, I think it's fairly overhyped. I think you'll see a very similar cycle to what the CryptoPunks went through. They'll remain valuable, especially some of the really early inscription numbers. But ultimately, unless it gets some more utility other than just it's a collector's item, I don't see how they maintain the hype, and I think that hype will be drawn out. I think that there's much better chances of the sectors that provide that utility within the video game space, because video games already do that, and you have $10,000 to $100,000 skins in games like CSGO now where you don't own them. So that's where I think the leaders will take place. If ordinals start to be able to do that somehow, where it's easy and fast and it's not difficult for like, let's say a 14-year-old kid to figure out, I don't think it'll ever get there. I think we're in a hype cycle for the ordinals and the BRC20 tokens. So if the hype is moving upwards and you're finding these clear trading ranges within that, like Ordi, effectively, there's room for upside. But the next market cycle, I don't see it hitting a new peak. I just see the market cycle high being hyped up and then dropping back down and effectively becoming like a Neo or an Ant Shares, which is like, everyone's like, what the fuck is that? I haven't heard about that in years. John Ang says, can you look at Near, please? Okay, I'll do the last few ones for you guys here. Near is already on my permanent watch list, so we'll go back to the charts. Okay, we'll go to Near. Okay. So yeah, again, just part of the problem here is that your primary support here, we haven't even gotten back to yet, and a ton of supply has gone into that move to get us up. Just the market saying it doesn't like it. The trading range isn't very clear. Again, look at Link's trading range, perfect horizontal. It's not to say that you're always looking for a perfect horizontal range, but Solana, same thing, but back out on the daily, effectively a very beautiful horizontal range, and we've already cleared the primary support, which is way back here, and the main shakeout in spring, and moved well beyond that. So for Near, it just doesn't show that data yet. I would be, again, there is room for upside, but there are better ones like Fetch. Fetch is in a better position. It's already moved up significantly in the last few days, and it's performed a beautiful accumulation range. Two, actually. One accumulation range did a 10x in 2023, came back down, and then formed a reaccumulation range again as well, which is this nice perfect within the box here before breaking out. We followed this one very closely. But yeah, do you look at charts in euro at the moment? No, mostly because the euro is used by very few people in comparison with the US dollar. Almost all big funds measure in US dollar. Maybe funds will start to measure in Bitcoin at one point. But for now, the majority of leverage and funds all measure everything in the US dollar. It's just easier to use the same measurement because that's what everybody else is using. It's also the most liquid token is the US dollar. So measuring in euros doesn't make a whole lot of sense. Awesome. Awesome. Well, thanks for all the great questions today, guys. We're going to leave it at that. It's a 49-minute episode, and I'm sure I'm just chewing through. I'm actually on cell phone data right now. But we're going to do another video tomorrow, and we'll do a market update then, because I think we're going to get a bit more clearer backup phases from both Avalanche and Solana as well. So it'll be fun to see. But for now, Bitcoin is bullish. We're breaking through some pretty key areas of resistance here too. There's not a whole lot holding us back between here and that $63,000 mark. I am still hesitant because of the S&P 500 has had no retracement, but ultimately now I think Solana, Link, Fetch Avalanche are all going to move up to the top of the box, which we'll go over again in the private group. So anyways, just a quick little update for today. Thank you all for joining us. It's Teal with the Arcane Bear. We are going to end the episode, I think, like this.